AI bubble fears, a 500-point Dow drop, and Bitcoin briefly cracking below $90,000. Today was another stress test for this market. Let's break down what really happened and what it means for tomorrow. This is Market Close Daily, after the bell, before tomorrow. It's Tuesday, November 18th, 2025, and we're recording after the U.S. close with data updated through late afternoon Eastern. As always, everything here is based on confirmed closing numbers and vetted news, so you can focus on trading and investing instead of fact-checking. Closing bell recap. U.S. stocks finished lower again, extending the November slide. The Dow Jones Industrial Average fell about 500 points, down roughly 1.1% to around 46,092. The S&P 500 dropped about 0.8% to roughly 6,617, and the Nasdaq Composite lost about 1.2%, finishing near 22,433. Under the surface, the story was rotation. Mega-cap growth and AI leaders weighed heavily on the indices, but smaller names held up better. The Russell 2000 Small Cap Index actually gained around 0.3%, and 6 of the 11 S&P sectors finished in the green despite the headlines selling. Sentiment remains fragile after this year's huge rebound off the April crash. Fear gauges and breadth have been signaling post-bubble hangover for days, and today's tape reinforced that feeling. Traders are still de-risking around crowded AI and big tech positions rather than dumping everything across the board. Fed and macro update. On the policy side, the Federal Reserve stayed in focus, but this time it wasn't about rates, it was about supervision. This morning, the Fed rolled out new operating principles for bank oversight, telling examiners to focus more tightly on material financial risks and to act more quickly when they see problems. The stated goal is a sharper, more efficient supervision framework, not necessarily tougher overall regulation. At the same time, markets are still dealing with a data blackout hangover from the recent government shutdown. Key economic reports, including the September jobs report, have been pushed back. The Labor Department now plans to release that delayed employment report on Thursday, November 20th, and traders are treating it as a major catalyst for Fed cut expectations going into year-end. Put together, you have a Fed signaling it's in rate cut mode over the coming months, a banking system under slightly sharper supervision, and a bond market that has started to cool off somewhat. 10-year Treasury yields eased a bit today, but the bigger driver for equities was still equity valuation, especially in AI, not a sudden lurch in rates. Big tech, AI, and megacaps. The selling was led once again by the AI complex. NVIDIA slipped ahead of tomorrow's blockbuster earnings event. NVIDIA will report Q3 results for its fiscal 2026 year on Wednesday, November 19th at 2 p.m. Pacific, with the call later that evening. Wall Street is bracing for more than 50% year-over-year revenue growth, but also for any hint that hyperscalers might slow capital spending. Other megacaps joined the slide. Amazon dropped over 4% as investors digested a $15 billion bond deal aimed at funding AI infrastructure, and as European regulators announced a new probe into cloud competition. Microsoft, Meta, and other Magnificent Seven names were also in the red, contributing heavily to the index losses. At the same time, headlines kept feeding the AI bubble narrative. We saw more commentary about big funds trimming NVIDIA stakes, options traders hedging aggressively into earnings, and strategists openly comparing this unwind to prior tech manias. None of that means AI is dead. It just means the market is demanding proof that profits can match the hype. Sector Roundup. Today wasn't just a tech story. Underneath the surface, the market quietly rewarded more defensive and cyclical corners. Healthcare had a strong session, helped by gains in stocks like Merck, Medtronic, Regeneron, Gilead, and Danaher. all up roughly 2 to 4% on the day. Energy and materials also showed relative strength. Valero climbed close to 4%, and copper-linked Freeport-McMoRan gained around 2.5%, as traders rotated into cash-generating, hard asset-linked names while trimming high-multiple AI exposure. Financials and industrials were more mixed, but the key takeaway is this. The sell-off is not a broad liquidation. Money is moving from expensive growth to steady cash flow and defensives, which is a very different environment than what we saw in the early April crash. S&P 500 gainers and losers. Within the S&P 500 and large-cap universe, leadership looked very different from the usual AI suspects. Among notable gainers, Merck, Medtronic, Warner Bros. Discovery, Valero, PACCAR, Regeneron, Quanta Services, Gilead, Freeport-McMoRan, and Danaher all posted solid 2 to nearly 6% advances. That's healthcare, media, energy, industrials, and materials all showing up on the leaderboard. On the downside, the biggest decliners told the story of the day. Home Depot dropped about 6% after earnings disappointed and guidance remained cautious, making it one of the worst performers in the Dow. Chip and storage names like Marvell, Micron, Western Digital, and Seagate all slid roughly 3 to 6%, and broader big tech pressure showed up in Amazon and AMD, which were down more than 4%. Chinese e-commerce name PDD lost over 7%. For traders, this was a classic leaders lag, laggards lead tape, something you see often when markets test whether a hot trade, like AI, has gone too far. Deeper cuts and names to watch. Let's zoom in on a few names beyond the usual mega caps, with one idea for traders and one for long-term investors. For active traders, Home Depot is worth watching over the next few sessions. The stock was hit hard today on an earnings miss and cautious outlook, with shares sliding roughly 6%. At these levels, you're near short-term support from earlier in the year. The setup is straightforward. If the macro data later this week confirms that the consumer is slowing, the downtrend can extend. If not, you could see a sharp, bad news priced-in bounce. Either way, volatility should be elevated. For long-term investors, Merck looks interesting as a steady compounder in a messy tape. The stock jumped about 4% today, helped in part by ongoing enthusiasm around a multi-billion-dollar flu drug collaboration and its broader drug pipeline. You're not buying it for explosive upside in a week. You're buying durable cash flows, a strong balance sheet, and a business that tends to hold up when growth stocks wobble. Other deeper cut names on the move included MicroStrategy, up nearly 6% as a leveraged proxy on Bitcoin. Valero and Freeport-McMoRan as plays on energy and metals, and PDD on the downside, as China-related risk remains a headwind. Just remember, these are volatile names. Position sizing and risk management matter more than ever. Smart money and structural moves. Microsoft and NVIDIA deepened their bet on AI infrastructure through a multi-billion-dollar investment in Anthropic, valuing the startup in the tens of billions and underscoring just how much capital is still flowing into AI despite today's market nerves. That's important context. The stock prices are volatile, but the strategic money is still moving aggressively into the space. What to watch tomorrow? Let's talk about tomorrow, Wednesday, November 19th, because the calendar is loaded. Before the open, retailers take the stage. TJX companies, Lowe's, Target, and Williams-Sonoma are all scheduled to report pre-market. The focus will be on traffic, discounting, and any early read-through on holiday demand in a slower labor market. If guidance is cautious across the board, it reinforces the soft consumer narrative that Home Depot hinted at today. NASDAQ. After the close, all eyes are on NVIDIA. The company reports Q3 FY26 results, with analysts looking for EPS around $1.25 and revenue near $55 billion, more than 50% growth year over year. Just as important will be comments about AI spending from hyperscalers and enterprise customers, plus any color on supply constraints and pricing. This report has effectively become a referendum on whether the AI trade is a bubble or just consolidating. On the macro side, housing starts data for September is due in the morning, and markets are already looking ahead to Thursday's delayed jobs report, which will finally give a fresh look at the labor market after weeks of data gaps. Combine that with ongoing AI volatility and crypto swings, and you've got plenty of catalysts for another big move. That's your November 18th market close daily. After the bell, before tomorrow. Manage your risk, know your levels, and we'll be back with a full breakdown of how the next wave